Hi everyone, hope you're doing well. Today I'm going to talk about one of my UK turnaround stocks that is having a really good time recently, and it's led a lot of people to ask me what are my updated thoughts and when will I potentially sell this turnaround stock. So we're going to go through that all today, so hopefully it's useful for you guys that have been asking. They actually did come out with interim results this week, so we have updated information about what has been going on, and then we'll run the numbers towards the end and my thoughts with what is the situation. So the stock is Watches of Swizerland Group, and you can see here really from August time the stock has been like a rocket ship and has gone up 53%. Now, I have a big history of Watches of Swizerland Group because I actually started buying this stock around about a year ago. This stock had a bit of a wobble. They did a bit of a profit warning, and the stock seems to be a bit overdone during that time frame. And I started buying during about February time in 2024, and the stock had a pretty decent rally. And I ended up selling the stock out for about 50%, and I thought, you know what, I'm going to walk away here from this position. Now, what I didn't expect to happen in 2025 is that we would see the stock have such a drop once again to those lows. And really from when we came in at the start of the year, around about a £5 stock, mainly due to the tariff situation, we got given the opportunity to buy Watch the Swizerland Group again around about the £3.40 range. And then what was even more surprising is it had a rally, and then the market just totally sold off the rally and sent it back down to even lower, a £3.20 stock. Don't know why it happened. My feeling is that it was just because of the tariff and obviously Switzerland not having a trade deal in place potentially, that the market panicked a little bit and just put it way too low. But in that time frame, the company was doing really solid financial updates, and I was making this video here. That was the last one. Let's go to when I bought it again around 7 months ago. So when I said I bought a new turnaround stock here around about 7 months ago, I thought this is just way overdone. The market is just panicking way too much about this situation, and then since then the stock has gone to rally up 56%. So personally for me, I'm up over 40% on this position, and what I'll do today is talk about potentially when I will sell my position. Now, I did trim the position slightly this week, I'll be honest with you, around about 5%, just to lock in a bit of profit, because it seems like a lot of UK stocks at the moment, whenever we have the rallies, the market just completely sells them off. So I've just done that from a protection point of view, but I'm talking about here like the majority of the position. I don't think any retail stock is realistically going to be ever a hold forever stock for me. So is there a point where I would, potentially release all that capital? So we're going to start off with the recent earnings. I went through the interim results a couple of hours ago. Listened to the webcast. Bit of information on there. The financials are still absolutely banging out here at the moment. Really good. Revenue up 10%. EBITDA was up 6%. The US, which we saw was for years now, they've been banging on the table going, the US is our key driver. Once again, is the main reason of the performance, and now makes up almost 60% of the profitability of the business. They also said that they welcome the reduction in the US tariffs, which is obviously great for them. I think that's maybe the concern why the stock got so low in August, and now that that's kind of gone, really, that's a massive positive. And I remember when initially that news came out, the thing with Watches of Swizerland Group is it brings out this really good information, and the market always seems really slow to react to it. It sends the stock up like 1-2%, and then the next coming like days and weeks, the market finally goes, that's actually probably like really, really good news. And then everyone starts buying into it. It's a really strange stock sometimes with some of the stock price movements on the business. They said commentary on the second half has started well. Trading is in line with expectations, which is great. You can see that the UK and Europe, which they have exited from Europe now, is growing around about 2%, which is okay considering the UK is not a great economy, is it? And some of the things that the current government have been putting in place. And Watches Swizerland Group were pretty, banging on the table. They're a bit like, what is the UK government doing with some of these changes? We've seen a lot of their higher rate taxpayers that will probably be buying luxury goods move away from the UK. We've seen like the travel incentives that when you go abroad and purchase items, you can get the tax refund removed as well. Considering all that, the UK is not doing too bad, but obviously the big dog, the US, growing 15%, and on constant currency basis 20%. So as this makes up more and more of the business, obviously that's going to be accelerating those growth rates, which is great. And they were saying like we still expect the US to be a really key growth driver for us. If you look at EPS, that was up 57%. However, there was a couple of one-time charges in there with the acquisition, so maybe not the best net metric to use this time round. Net debt was paid down slightly, which is great, to be fair. If you look here, luxury jewellery still continues to grow well for them, up 12%. Roberta Coin, which is the acquisition they made, is growing very well, up at 16% in constant currency basis, which is great. The pre-owned continues to perform well. It's now the second largest brand, which is fantastic. You know, this is the great thing. When this was launched, I think I remember making a video on this, you know, about a year ago, saying that, you know, the pre-owned business is great because you buy the watches in at the prices you want to, and then you sell them at the prices you want to. Normally, you know, Watches Switzerland Group is a retailer and Rolex is a big brand for them, but Rolex is really dictating a lot of the prices to them, really. But if you're buying in at your own, you know, the person on the street, you know, comes in and wants to sell a watch to them, you can basically buy in at that price and then put it up for what you want. So really good growth driver for them, and I can see it doing really well because of that control that they have. E-commerce revenue was up 17%. Shout out to Shopify shareholders. They'd also mention that they recently switched to a Shopify shop as well. They said that they have introduced a new Roberta Coin shop-in-shop branded displays in the US retail showrooms, and it has more than doubled sales. They did show some videos and images during the presentation, and I gotta say, it does look really good, to be fair. And overall, financially, it was a really good update for them, really. You're looking here, actually, you know what, there's a couple of points that I want to make. So we're listening to the conference call. They were saying, like, you know, the US is still a key driver for them. They said they reckon around about 70% of the US market is still independent stores. So, you know, when a major chain like Watches Switzerland Group comes in, there's still big market share that they can take as well. It sounds like they're very close to making an acquisition, in my opinion. And they said, like, you know, we are not paying a dividend. Our focus is to keep expanding and making those acquisitions. So I think you're going to see a couple of acquisitions going forward. I thought, is anyone going to ask about a US listing here? Because you look at the amount of profit now is the majority of the US, and the US is the key growth driver. You know, why not switch to a US listing now? And they came out and said, no, we're not switching to a US listing, which I was really surprised by. I thought if you stick a company like Watches of Switzerland Group and the premium that you'd get in the US for a company like this compared to the UK, it would be massive. And I was really surprised, actually, when they said they weren't going to do that. Now, just to show you, even though these numbers have been really, you know, impressive from Watches of Switzerland Group, the P ratio still sits at around about 11 times earnings, which is incredibly low. You know, for a luxury brand, one of the really only ways to publicly own Rolex, growing at 10% with this US growth growing 15% or 20% on a constant currency basis, at 11 times earnings or 10 times next year's numbers. That's still a really, really low valuation. And you look at what Watches Switzerland Group has previously traded at. If we look at 2021, 32 times earnings. 2022, 25 times earnings. 2023, 17 times earnings. It did close off the year at 14 times earnings in 14.8, let's call it 15 times earnings. But as we know, the stock was starting to have a bit of a dive towards the back end of 2024. So, yeah, I'm looking at that and I'm thinking it still, even with these numbers, looks quite cheap for where Watches Switzerland Group is at. So when I'm looking at the numbers here, I've got 4, 5 and 9% revenue growth if they keep up at that higher rate. Profit margins of 4, 5, 6% and about 15 times earnings, which I think is more than fair for a Watches Switzerland Group. So on the low side, you've got not much upside here. On the mid side, you got 36%. On the high side, you got 90%. I think personally, for me, they're going to be somewhere between a 36% to a 90% upside from where we're at right now. Realistically, like I said, I think the company is going to go to a 15 times earnings multiple at least. So that would suggest you've got about a 50% upside. 50% upside from here, you know, you're talking around about a £7 stock, £7.50 to be precise. And I think that's probably where I think Watches of Switzerland Group should be. I think looking at the numbers they're doing in the current valuation, I believe that Watches of Switzerland Group should be somewhere between a £6 to £7 stock, probably minimum. Then on top, you do argue the case, does this company trade at more of a premium with the numbers they're doing? You're getting the luxury brand, the only way really to publicly own Rolex. And let's say they do get pushed up to like an 18 times multiple. And that does make a pretty significant difference, as you can see here. I don't know if they're going to get there, but it does show you that does make a big difference if that metric expansion does come in for the business. So looking at the numbers they're doing and looking at the bare minimum at 15 times earnings and where the price is right now in the financials, yeah, I'm probably not selling even though I'm up on this position. I do still think that Watches of Switzerland Group should be a £6 to £7 stock. And then when the stock does get there, that's when I'll consider, okay, is it time to maybe take some profit from the business? Like I said, going back to the point about the US listing, this is why I'm really surprised they're not doing a US listing, because a company doing this financials with the US growth, you could argue the case that this company then goes to a 20 to 30 times earnings. And then all of a sudden you start thinking, okay, if this company trades at a 30 times earnings multiple, the upside here is absolutely, like you're falling back on your chair a little bit. That's if they do get that premium. And that's why I'm thinking, there's no way on the UK markets they're getting a 30 times earnings premium. But you switch to the US, I don't know. You could even argue the case about a 20 times earnings premium on the US. And then if we put a 20 times earnings premium on the US, look at that. So I'm really surprised they've kind of like knocked off the idea of moving to a US. That was kind of my thinking of that I might hold it a little bit longer if that does happen. But the fact that they've ruled it out, I'm surprised. But yeah, ultimately, where am I at with the turnaround? I'm really happy with the financials. Like the financials recently have been like solid 9, 10 out of 10 earnings. And yeah, I'm still holding, and I will continue to hold to a £6 to £7. And then when the stock does get to £6 or £7, I'll come back and I'll tell you guys, do I keep holding now or is it a sell? But that's my update thoughts on Watches of Switzerland Group. Hope it was useful. Congratulations to any of you guys that are holding Watches of Switzerland Group. I'm sure you're doing quite well at the moment. I mean, what a gift. The market can be ridiculous, isn't it? I mean, you just look at how ridiculous the market can be. The fact that we had the tariff lows and then we bounced out and then the market decided to give you a second opportunity in August to pick it up at £3. I tell you guys, that's the great thing about the market. You can really take advantage of those opportunities and make good money. You've got to ignore the noise, because I remember there's a few headless chickens when the stock went to £3 and they were going, Watch the Switzerland Group's finished, it's finished. It's like, well, are you sure? And now I think maybe a few people are kind of waking up and going, actually, you know what, this looks good value, to be fair. Anyway, that's the video, guys. Have a great weekend. I'm going to try to do the US stocks I'm buying for you guys on Sunday. Apart from that, I'll see you in a bit.